Hello there, welcome to David's Investment Analysis channel. I am so happy that my last video on Tattoo Chef reached over 1,000 views in less than 2 days, and that's a record for me. And thank you to those that have watched my video and liked it. And if you haven't had the chance yet, I've linked it in the description below. Make sure to check it out. By popular demand, today I'll be discussing about Opes Acquisition Corporation. It's also a special purpose acquisition company that is planning to merge with BurgerFi International, making BurgerFi International a publicly traded company after the transaction closes. The transaction is expected to close third quarter 2020. The stock price of Opes Acquisition Corp went from $10 to $17 now. That's 70% increase since the beginning of June. In the next bit, I'll talk about BurgerFi, what they do, how they earn income. Then I'll look at their qualitative aspects of their business and follow up with a quantitative analysis looking at their financials and valuations. And then I'll conclude on whether I think the stock is a buy at its current price and whether I own any of the business myself. If you wish to skip the introduction and analysis, I left timestamps below so you could go directly to the conclusion. I have spent a lot of time preparing for this video, so I would really appreciate if you could like, share, and subscribe. And if there's any other company you'd like me to cover in the future, please leave in the comments below. Now let's get to it. BurgerFi is an American fast casual restaurant chain focused on all natural burgers, french fries, hot dogs, and custard. With its first store opened in 2011 and now with nearly 125 locations in 23 states domestically and 2 countries internationally. BurgerFi is committed to an elevated and contemporary dining experience that appeals to an informed and growing customer base, placing a high value on quality ingredients, transparency, and a desire to avoid antibiotics, steroids, chemicals, and additives. They are best known for their burgers using certified American Black Angus beef, and they also offer plant-based Beyond Burger on their menu. In addition to the burgers, they also offer chicken that is free of hormones and antibiotics. They also have hot dogs, french fries, onion rings, and shakes and custard available. Now let's look at some of the qualitative factors. Management team. The CEO is Corey Winograd, and he's been the CEO since 2014. Prior to that, he was the managing director and senior consulting for BurgerFi. Prior to BurgerFi, he practiced law. The founder and chairman of the board is John Rosati. He founded BurgerFi in 2011. In addition to founding BurgerFi, he also founded and is the CEO of Plaza Auto Mall, the largest certified dealer in metropolitan New York. It seems like that's not enough. He's also a restaurant owner since 2009. BurgerFi management team appears to be strong, that's run by a lawyer and a successful entrepreneur, and that has helped BurgerFi to increase its location to nearly 125. I will continue to trust the management team until I see any issues. And since the announcement of the merger, John Rosati posted on his LinkedIn a letter to consumers, and here is an excerpt of it. And it says, "Not only is this incredible opportunity put our company on the map, it will also bring in significant capital to grow BurgerFi into the brand that we all know and is destined to be. While we may now have the rocket fuel to propel us, our ideals and aspirations remain the same. Expand our footprint, enhance profitability, build support for our restaurants, and most importantly, continue to serve only the best burgers and highest quality food in the industry. Please know that I will be involved more than ever to keep us on our trajectory." It's good to know that the founder and chairman makes a statement that he will be more involved than ever. Industry outlook. Per Allied Market Research, it is expected that the fast food market is set to grow at 4.6% compound annual growth rate between 2020 and 2027. Although the 4.6% growth in the industry does not sound very exciting, but if we look at how BurgerFi has done in the past and what they have invested in, we would be able to better estimate how BurgerFi would do in the future. In this press release, it is suggested that BurgerFi sales increased 13.3% in 2018 to $136 million, which is pretty positive, comparing it to the expected growth between 2020 and 2027. It also highlights that some of the growth is a result of their online orders, and we can see here that BurgerFi has invested a lot in their infrastructure. This is especially important when they were hit by the global health issue, with many individuals staying at home. They highlighted this in their press release regarding the merger. BurgerFi has remained on the cutting edge of innovation by having significantly optimized its takeout and delivery platforms for superior performance and profitability. At-home diners can enjoy a seamless ordering experience offering through multiple platforms, including BurgerFi's website, mobile app, and several leading third-party delivery platforms. And in my opinion, this is very positive news for the business. In this press release on November 1st, 2019, where it was announced that it would be partnering up with American Air Force to expand and grow its brand into American Air Force Base globally. In here, it suggests that the sales increase from 2017 to 2018 was nearly 30% increase. In the same article, it also discusses about the current and potential global expansion into Mexico, Kuwait, Puerto Rico, South America, Caribbean, and the Middle East. And in this article, it suggests that BurgerFi has increased sales in 2019 by 3% to 141 million, which appears to be a bit low, but if we use the 2018 sales of 136 million, it does sound about right in terms of the sales increase. But it does say here that the company has averaged 18% growth over the past 5 years, compared to 11% for other fast casual burger space. And just a few days ago, they announced their first ghost kitchen in Miami, Florida. A ghost kitchen is pretty much a food preparation and cooking facility set up for the preparation of delivery-only meals, and does not have a dining area for walk-in customers. And they have 15 planned ghost kitchens that will be opened later in the year and into 2021. This is pretty positive. Instead of closing their stores, they're actually expanding during this time and adapting to the new normal by offering their meals delivered to consumers and have them prepared in ghost kitchens. And by doing this, they will reduce rent and labor costs significantly. And since they already have a good infrastructure in place for online orders, I believe this would help drive the growth for BurgerFi. Not only that they can grow with ghost kitchens, they can definitely expand to the West Coast, as they are currently more concentrated in the East Coast. BurgerFi's growth is driven by their strong brand, and in 2018 it was named one of the top 2 national brands in the burger industry, maintaining the highest standards for the sourcing of their beef. BurgerFi received an A on the 4th annual Chain Reaction Scorecard, released by 6 major consumer and environmental organizations. Other than Shake Shack, who also received an A, the rest of the competitors received a D- or an F. In 2019, BurgerFi was named the best burger joint by the Chain Reaction Report. Not only a strong brand that they have, but also a good reputation, as they, along with Marcum Foundation, deliver nearly 20,000 meals to hospital workers and first responders on the front lines during this global health issue. This brings up some risks, such as the global health issue. Let's look at the implications on their competitor Shake Shack, since BurgerFi information is not available. It says here, effective March 16, 2020, we've closed all dining rooms and temporarily shifted to a to-go only operating model in all of our domestic company-operated shacks. As mandated shutdowns and stay-at-home orders went into effect across the country, we experienced an immediate and drastic reduction in sales levels compared to the prior year. I would expect BurgerFi to also be significantly impacted by the global health issue and a reduction in sales level compared to the prior year. But as noted earlier, they do have a strong online platform that should somewhat offset the decrease in revenues. There is a lot of competition within the industry. There are those family-owned restaurants to huge multinational restaurant chains, and some direct competitors like Shake Shack, where they have been growing around 30% a year, mostly attributed to the opening of new locations. In this type of industry, the net margins are usually very, very low. Using Shake Shack as an example, their net margins are approximately 3% of the revenue in 2019 and 2018. The transaction won't be closed until sometime in the third quarter of 2020, and the deal would likely require shareholder approval and subject to several closing conditions. And some deals do fall apart, and TGI Friday is a great example, even though the deal was announced prior to the global health issue. Food review. Unfortunately, there are no BurgerFi near me, so I don't have the chance to try their food myself. But I've read a lot of reviews online and watched several YouTube videos, and majority of them said that the food was amazing. Now let's look at the quantitative analysis. Unfortunately, because BurgerFi is a private company, their financial information is not publicly available. But I do expect maybe by end of June or early July, Opes and BurgerFi would provide more information regarding BurgerFi's financial situation. If you would like me to do a follow-up quantitative analysis with the information, please let me know in the comments below. However, I've been able to find some information which will help us somewhat evaluate the business. These are some of the estimates for their revenues. These are from multiple sources and perhaps some of them may not be reliable, and there was some discrepancy, but it's the best info that is publicly available right now. It is estimated that the 2019 sales is between 141 million and 150 million. No information on their expenses, cash flow, or debt level. Valuation. Shake Shack's 2019 sales is approximately 595 million and is trading at 3.69 times 2019 sales. If we use the same multiple on BurgerFi's estimated 2019 sales of 150 million, and that would give us a valuation of 554 million versus Shake Shack's valuation currently at 2.2 billion. Let's try a different way of evaluating the company. Shake Shack's revenue in 2015 is 190 million. Let's see what valuation it was trading at in 2015. With 13.59 million in shares and the stock price being between $40 and $90, the valuation will be between 544 million and 1.2 billion. Based on these two valuations, I would expect BurgerFi to be worth between 500 million and 1 billion, more likely closer to the 500 million than the 1 billion. Please note that the valuation of Opes you see here of 134 million does not represent the combined company, and this is just the valuation of Opes. To appropriately determine whether the price of the share is undervalued or overvalued, we'll need to know the outstanding number of shares post-merger, but unfortunately the information about the merger is currently limited, but I do expect the additional information will be released end of June or beginning of July. Store count multiple is not a good metric to use since the ratios and sales between the corporately owned and franchises are different. Conclusion: I believe the stock at $17 is not a buy right now, and that's mainly because I am not able to evaluate what the company should be traded at without having additional financial information. There are many things to like about BurgerFi. They have a good growth rate and it's growing faster than the industry and faster than their competitors, which suggests that they are increasing their market share within the fast food space. They have several strong growth initiatives, including the intention to grow within the US, growth through partnerships such as with American Air Force, investing in e-commerce and ghost kitchens, and BurgerFi have really been able to adapt to this global health issue. BurgerFi is run by a lawyer and successful entrepreneur, which leads me to believe that they have a strong management team. However, there are some risks with BurgerFi. Although BurgerFi has been able to adapt and is currently growing with many growth initiatives, the global health issue most certainly would have impacted on their business. It would be interesting to know how much has it impacted their sales from the store closures and reduced operating hours. The fast casual restaurant industry is very competitive, as its barrier to entry is low. And not only does BurgerFi compete with large multinational chains, they are also competing with small restaurant owners. The merger transaction is still subject to shareholder approval and closing conditions. In addition, there is still a lot of unknown, and I expect that there will be some information about the merger coming out in the next couple of weeks. And because of the lack of financial information, a valuation of the current stock price is impossible. So I cannot determine if the stock, in my opinion, is undervalued or overvalued. And again, this is the main reason for my conclusion. As much as I love the company and what they are doing, I would need more financial information for me to make an educated decision. Disclosure: I do not personally own any shares or warrants of Opes Acquisition Corp. I do not intend on buying any shares unless I have more financial information for me to determine the valuation. I do really like the company and what they are doing, and I do plan on following this company going forward. If you would like me to do a follow-up video on BurgerFi and its valuation once the financial information is available, please let me know in the comments below. That's it for now. I've spent a lot of time preparing for this video, so I would really appreciate if you could like, share, and subscribe. Thank you for watching. Until then, see you next time.